What is stock trading? Stock trading involves buying and selling shares in companies in an effort to make money on daily changes in price. This short-term approach is what sets stock traders apart from traditional stock market investors who tend to be in it for the long haul. While trading stocks can bring quick gains for those who time the market correctly, it also carries the danger of substantial losses. A single company's fortunes can rise more quickly than the market at large, but they can just as easily fall. Financial advisors generally don't recommend people invest in individual stocks unless they have money they could afford to lose. You don't have to work on Wall Street to learn stock trading. Online brokerages have made it possible to trade stocks quickly from your home computer or your smartphone. But before you dive in, you should make sure you know how the stock market works, the best apps for trading stocks, and how to manage your risk. There are two main types of stock trading. Active trading is what an investor who places 10 or more trades per month does. Typically, they use a strategy that relies heavily on timing the market, trying to take advantage of short-term events, at the company level or based on market fluctuations, to turn a profit in the coming weeks or months. Day trading is the strategy employed by investors who play hot potato with stocks, buying, selling and closing their positions of the same stock in a single trading day, caring little about the inner workings of the underlying businesses. Position refers to the amount of a particular stock or fund you own. The aim of the day trader is to make a few bucks in the next few minutes, hours or days based on daily price fluctuations.